So in your regression, you have theta 0, I think, that multiplies x. Then theta n multiplies x by n. You're missing a term. Theta e multiplies n.
It was really fast, but it was a first order approximation around.
No, but there's another term. No. It's 30. No, theta e or whatever multiplies n, and that can be negative. So I think the canonical example of a negative externality with strategic complementarity is the burglar alarm. So if you install a burglar alarm, you benefit because you're displacing the burglars to other people. But then when your neighbors have burglar alarms, they're displacing the thieves to you. So you adopt a burglar alarm to avoid that, but maybe you're worse off with a burglar alarm.
Yeah,
that's the idea. So that would affect your subsidy analysis.
Yeah. Okay. So two things. So that extension of the model is one, but I made the assumption that theta n was positive. So you want to do what others do, right? So if you make that negative, you want to do something different. It's kind of like your kids don't want to adopt Facebook because parents are already on Facebook, right? Okay, that changes the entire subsidy analysis, as you said, right? Of course, the subsidy could become a tax, and it could be the entire opposite thing. And in that case, if you solve it, you don't have the multiplicity of equilibria. It's unique. It's a different analysis. So the analysis relies on people benefiting from the network effects. Theta n, we assume is positive. Yeah.
What could you imagine happening if there's some sort of I don't know if it's a shock, but a large employer or a government says we're going to pay all of our employees starting January 1st using this wallet, and it's forcing a big chunk of people on who probably were somewhere different points on that curve. Like what is that a good idea? Or what? How
in this model, it would be because what I'm going to call it decentralized adoption is what the market does on its own without any intervention. It's not optimal. So it would be optimal to incentivize it more. So it could be like a firm that internalizes that and says like, look, people can benefit more. And in your case, they will start subsidizing it or paying them in the app or giving them cash back if they use the app or something like that. In that case, yeah, we will get closer to what is efficient.
Do you think that would change the rate of adoption of people who aren't directly affected by the...
Exactly. Because as more people adopt, the rate of adoption of the people that are waiting will increase as well, and you will see a change in slopes. Exactly. That will be the effect of the network effects. That will be the cleanest way of seeing it. Actually, if you see in India during the demonetization, I mean, you see exactly these changes in slope. Yep.
Can I go first?
Yeah.
Okay. So my question is also to David. Thank you for the great presentation. I wanted to ask you a little bit about the model. So you did show us the optimal adoption path and how that's possible. But when we talk about the network effect, can your model also predict what that tipping point is? So like that point of no return. So in the case that if it's a P2P product, once you've hit 30% adoption in a market, then there's no way that company will, I guess, not be popular anymore. So is your model...
Yeah, I mean, that's actually something I didn't talk about, but it's key. Okay. It's key. So remember I said there was an equilibrium of no adoption and an equilibrium of high adoption. But there's a tipping point. If you start enough people with the app, you rule out the no adoption equilibrium and you can move to the high adoption equilibrium. And we can compute that tipping point. So if you go back to the case of El Salvador, they gave $30 in subsidies for people to adopt the app, and yet they went to the no adoption equilibrium. That means the subsidy needed to be higher to start enough people in the app so that these complementarities can start unraveling. And that tipping point is exactly a function of how uncertain is the future, about how people perceive the adoption in the future, and the theta n parameters, the complementarities. This is why I spent so much time trying to measure it. But yeah, there's exactly the tipping point. Yeah.
I have maybe 2 questions or 1.5. So in that on the tipping point, it's like if I see that it's not going well, I add more features to my app, and then it should I should see it like moving forward.
Exactly. So you might not suppose you don't want to subsidize all the way like the planner does over time, but you can subsidize enough at entry so that you get enough people in the app, and then you at least go to the high adoption equilibrium. Yeah,
Okay.
exactly.
And then I have a question that I didn't understand. You said that you can measure the data from, but like that's from the original data. It's not like you measure the data and that it works for other data, or you know.
Exactly. So for my data, the data that I have in Costa Rica, the regression that I run maps to the model that I wrote. So if you change your networks, that maps to my data, and then I can take it and plug it in my model. Now, data could be different in El Salvador, Brazil, or Colombia, right?
And then that will move your data. So I don't follow how you will use it. It's like I have the model, I have already the data, so I know already how it moves.
Yeah.
And then I fit the data.
So you run the same regression that we ran, and you get the data, and then I give you already the expressions for the tipping point, the subsidy, and the steady state level of adoption. The paper gives closed form expressions for that. So you just plug it in. Yeah.
I also have a question for Nicola. So in your, he's still awake. In your model, remember when you introduce this interoperability, there is a reduction in the antennas that are in operation. So I thought this reduction in towers might actually be efficient. At least some of it is efficient, because you also showed us a country, was it Sierra Leone, where you have a lot of duplication, that basically same areas covered by 2 providers. So if you go from 2 providers to 1 provider, people still have access to the phone, but they have interoperability. So they have to switch provider, but other than that, they still have access to the phone and they have interoperability. So they've the best of both worlds. So, but you also showed us on aggregate, there's a fall in coverage at all. So maybe you could clarify what fraction of the fall in coverage is actually efficient. So in other words, reduction of duplication of antennas, and what fraction is actually inefficient because you cut coverage.
Thank you very much, Marcel. This is a great recap and probably a much calmer recap of what I ran and scrambled to put together. So you are pointing in the right direction. Some replication is obviously inefficient. I mean, ultimately, we only need 1 tower to cover you all in that room. We don't need necessarily 2. Now, at the moment, while I am unable, I'm not sure I am able to tell apart how much of that is efficient and how much of that is inefficient. What I know for sure is that there is a decline in coverage, and there are districts that lose access altogether. So I wonder, but this is a good exercise that I could in principle do somehow. So which is to go from, no, you're right. I could actually see areas that had more than 1 operator. So I know that I see that the number of operators is going down by 20%. So, and I could try to measure something like you go from more than 1 to 1, or you go from 1 to 0. In a sense, right now I am confusing, you go from positive to 0, but I'm not telling you from, I'm not distinguishing between. So that could probably be closer to what you had in mind, giving you the share of districts that see a drop from positive to 1 and from positive to 0. So that could be a way to tell this apart. That's a good, I hadn't thought about that. Thank you very much for this comment. It's very thoughtful.